Stocks having their biggest two-day decline of 2013. So should investors be prepared for a correction or perhaps even worse? Joining us now on the Fast Line is Marc Faber, publisher of the Gloom, Boom, and Doom report. Marc, good to have you with us. You're going to be pretty doomy and gloomy tonight, I'm guessing, but in terms of a pullback, you've said in the past a 1987-like correction. Is that what we're in? Is this the beginning of that?
I don't think that's yet there, but I think we have made an intermediate top, and it could be a longer-term top. I don't think the market is as overbought as it was in 87, so I don't expect a crash. But I think for the time being, the market has peaked out, and I think that in the meantime, bonds, which are extremely oversold, could rebound.
So let me get this straight, Marc, just to be clear for our viewers out there. You don't necessarily think that at this point in time, this two-day decline in the S&P 500, you don't think that that is the beginning of a 1987-like crash? The parallels aren't quite there between now and 87.
Correct. What I maintained in earlier interviews is that either we have a correction now, and then we go up further, or we go straight up into a high in July, August, from where we could crash. So I welcome a correction here. The question will be, after this correction, we have to watch the market's rebound, whether it can make a new high or not. Maybe this high we just had at 1530 on the S&P will prove to be a longer-term high.
So, Marc, I know that a lot of viewers out there listen very closely to what you say. They're loyal CNBC watchers, and they've seen you on this network in the past predicting a similar correction or decline. In February and May of 2012, you said that you expected some sort of a pullback. In August of 2012, you warned of a false rally, and we haven't seen that. Why should viewers believe you at this point? What's different now? Why now?
Well, actually, I don't think that I've been so totally wrong as you stipulate. There was a correction in between March, April 2012 and actually June 2012. So we had a correction, and then from September onwards, when the S&P reached 1474, we also had a correction into November, at which stage I said that the market would now rally. So I don't think that I've been so totally wrong about the moves of the market, especially since 2009. And I can document also the performance of my portfolios. But I think that the market has now become quite overbought, and that there is very significant or overextended bullish sentiment. Everybody says sell bonds, buy equities. And when everybody thinks alike, one has to be careful.